Hi everyone, it's time for us to take a look into 2025. We have been right most of the time in 2024 according to our conservative capital deployment tactics and strategies. We are now happy to share with you our readings of the 2025 investment swing factors, how to invest in a chaotic era and formulating your 2025 investment plan. Three key facts for investors to reflect in 2024. We have witnessed volatile US dollar bond pricing during Q4 2024. Yet, after all these changes in the bond price, we see little change in the interest rate as a whole for the year 2024, signaling investors expecting interest rate will not go down from the current level a lot, and we see investment risks actually increase in US dollar denominated bond assets. Double-digit returns on US and major Asia stock market indices in 2024. AI thematic stocks standing out. It is saying risk is on for most of the risk investor. Korea stock market became the worst 2024 performer due to local political uncertainties and lackluster prospects among their blue chips. Yet, we should alert to political uncertainties as they will be harmful to local asset price. The third point, strong performances on alternatives. Gold, Bitcoins, and other bullion continue their bull run, and we see obvious increased allocations to alternatives by investors in 2024. We have seen a balanced portfolio produce around 6.5 to 12% according to their risk appetite, and you can see the Bitcoin is the exceptional performer for the year-to-date return in 2024 as well as in the 5-year period. And our barbell investment strategies that we highly recommend to conservative investors works extremely well in 2024 through buying both high risk and having majority of the asset in low risk assets like high grade bonds and time deposits, and it works extremely well. It is always useful to look back into the recent history to find out which sectors are performing and which sectors are not performing. We have found out there are 3 sectors in the past 5 years outperforming their respective local bond market indices, and these sectors are technology, healthcare, and consumer discretionary. Their relative outperformance range from 100% to 5% in the 5-year periods, and we expect outperformance of this sector will continue into 2025. Regarding the underperforming industry sectors, we find there are several: insurance, agricultural, commodities, food, banking, energy. Their relative underperformance range from 60% to 10% in the 5-year period, and we expect underperformance of the insurance sector will continue into 2025, as we have seen a lot of the environmental disasters by uncertain climate conditions, as well as a lot of military conflicts and political uncertainties in the world. Saying about the market, especially by some top global banks. We have summarized potential impacts to financial markets due to Donald Trump's economics. First, Trump's trade tariff tactics is likely to increase volatility in global financial markets, which is a negative impact. His protectionism policies may escalate tensions through global trade conflicts, leading to disruption of international supply chains and over consumer limited choices in local US market and causing higher retail prices in general. Also negative impacts. The US dollar may strengthen amid expectations of economic protectionism, which could impact emerging markets that rely on dollar-denominated debt for financing, and other negative impacts. Yet, it will be good for job creation and attract foreign funds inflow into US, which is positive impacts. Overall, traffic tariffs can create challenging environment for stock market investors globally, leading to increased volatility, sector-specific impacts, and potential economic slowdown that affect investor sentiment and market performances subsequently. As they spoke also, global political tensions and military conflicts prevail. Crypto, gold, and silver are obvious alternatives to hold. Crypto analysts remain bullish on Bitcoin, citing it as potential a hedge against inflation and economic uncertainty. However, they also warn its high volatility and only for diversified portfolios with rigorous risk controls. Gold is expected to continue its upward trend, supported by ongoing geopolitical tensions and inflation concerns. It remains a preferred asset for risk-averse investors. The outlook for silver is positive. It is the only precious and industrial metals, make it an attractive investment also. We see these alternatives as portfolio insurance, and they could turn into profits. These charts are just showing that they are at all-time high, Bitcoin and gold. It looks quite similar and is at all-time high. Are we looking for a higher US interest rate or higher FX rates at the same time? Overall, the trend for US interest rates in the coming 4 years could range from gradual decreases to stabilization or even hikes, depending on economic performances, inflation rates, and external factors. So do the US foreign exchange rates. Yet, it is very likely that both US interest rate and FX rate will likely to be flattish from current levels in Q1. We see global trade is expected to be dampened by US trade tariffs. According to the IMF data, in 2024, the percentage of global central bank reserve in US dollar is 55%, and percentage of global trade conducted in US dollar is 70%. And this number will get lower in 2025 due to the trade tariffs. Now, US stock markets are at historical high levels, and Hong Kong, China stock markets are consolidating after stage strong rebounds in September. In view of lacking channel for overseas investment, US investment funds will keep buying into the US thematic stocks. We have found an interesting chart that's showing in the last 16 years what has happened to different categories of US dollar assets. We see the US large cap stocks are consistently delivering positive return in the past 16 years, 88% of the time of the year deliver positive gains, while the Treasury bill, which is cash or cash equivalent, deliver 94% negative gains during the year in the past 16 years. So, US investors are preferring risk assets as a habit. Our takes for Q1 2025: maintain a diversified portfolio. There are upside opportunities in the two asset classes, equity and alternatives, and we see we should have some positions in technology and healthcare sectors when opportunities arise, and we should avoid heavy exposure in insurance sector. Of course, you can select some special counter to invest. Amid various global uncertainties, we see continued support to alternative assets such as gold and Bitcoin. Donald Trump, with his tariffs-biased trade policy, will trigger lots of financial volatilities in Q1. AI themes and other policy-driven fund flow, example in Hong Kong, China, will make an impact to mid-term investors' tactics. Flattish US interest rate outlook in Q1 and relative strong US foreign exchange rate is expected in Q1 2025. With increasing measures to protect US manufacturing industries and strong intentions to prohibit China investment in US, we see support to the US stock markets in Q1 2025. We expect no collapse, yet consolidations may happen in Q1. We see upside potential in Hong Kong and China stock markets. Barbell investment strategy is working very well, buying both high risk and low risk assets together, and can tailor make one's risk appetite. Overall, we have a positive take on Q1 2025 global financial markets. We see good returns for stock investor in 2024, and we expect no collapse in US stock markets and have upside for Hong Kong and China stock markets in Q1 2025. Also, we see upsides for selective alternative assets. Barbell investment strategy works well in 2024, and we expect it will also work well at least in Q1 2025. As a result of all the major intakes, we have not changed our personal asset allocations for Q1 2025 compared with the Q4 2024. Fixed deposits, high-grade bonds amount to over 70%, and we have risk asset and risk asset with and without yield altogether 25% of the portfolio, and we have 3% for cash in case there are opportunities for bottom fishing. Thank you for your time. Always keep learning and keep yourself active. Wish you all the best in Q1 2025. And do you believe this jade statue was built 5,000 to 6,000 years ago? Have a happy day.